Hey there, hey there, boo-boo. You gotta get the pips from the picnic basket. Good morning. Guys ready? Hey, Mom, turn the music down. All right, cool. Thank you, Mom. Hey, good morning, everybody. Welcome to Forex.Today, the YouTube community of 18,500 foreign exchange traders. Boy, that's got to be a large percentage of all Forex traders. Anyways, it's a small community, you and I, us, huh? But we control, what, almost $7 trillion a day. Well, that ain't bad. Hey, Bubba. So anyways, welcome to Forex.Today. Thank you for being a subscriber of this YouTube channel. Thank you for clicking the thumbs up to tell YouTube this is quality content. My name is Wayne. I will be your guide on this thing we call Forex. We're going to cover US dollar versus euro, pound, CAD, yen, Aussie, Kiwi. Combos of those, gold, oil, Bitcoin. I can try to address your questions and concerns about technical analysis, fundamental analysis, macroeconomics, central banking policy, fiscal policy, and anything about 1990s gangster rap. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's always wise to be small, stay humble, focus on the long term, never risk money cannot afford to lose. Yo, yo, yo. So welcome to my office here in Atlanta, Georgia. I am back from New York City where everything went tickety-boo. We had a great time. A bunch of FX boot campers got together, and we went up to the rooftop of the Harvard Club and said, "Holy crap, is it hot!" I'm telling you, it was like the hottest day in New York City ever. And even though that we were in the shadows of the skyscrapers on top of this 150-year-old building, you walk outside and the wind was hot. Like, oh my God. So we went inside, and even then the heat was just coming through the windows and sweat coming down our backs. And then we went out and had a good time, a few cocktails, a couple cigars. It was great. So anyways, thank you for being part of that. One thing that went wrong, and I just realized, this custom-made mechanical watch now is broken. Fudge. So they said, send it back and we'll repair it. You should have it back in no less than 3 to 6 months. Okay. So boo-hoo to that. It's weird, like the weight you see still turns. The weight turns, but it's not winding the power reserve. So that sucks. That sucks. So anyways, other than that, everything went fine. So I don't know what that was, huh? Maybe I dropped it. Maybe just up in the airplane. I don't know. Boo. Boo. But everything else, it was great to be in the city. It was great to hang out with traders. It was great. That night, I think the event started at 4. No, sorry, it started at 5 in the afternoon. And I got home about 4 o'clock in the morning. So thank you, FX Boot Campers. That was fantastic. I'd like to thank Traders Way for being part of the Forex.Today YouTube community. Why? Well, look, we are all on a similar journey. And in the beginning, you're most concerned with technical analysis, and then maybe you try some different techniques, and then you end up coming back to basically what I teach or some form of it. And then you're like, I need to learn more about fundamentals, and I got to get a little more profitable, and I got to learn to have small losses and let the winners run and manage my risk. And then all of a sudden, when you get all of that, the most important thing is the relationship that you have with an execution partner. And that relationship is built on trust. So maybe that's not a big concern for you right now. Maybe you have no money. Maybe it's small money. Maybe you're focused on learning the ropes. But one day it'll be a supremely important decision. And Trader's Way has earned my loyalty and respect. So if you start with a demo account today, maybe at the end of the year, maybe sometime next year, maybe in 5 years when you're ready to trade real money and go big, they would have already earned your loyalty and respect and your trust. So you're like, natural fit, right? So tradersway.com, open up a demo. Let's go. Let's get on with it. Your destiny is awaiting. Do not deprive yourself of your destiny. Yeah, Peter, and didn't it hit 2.0? It was one of those things, Peter. I almost bought it at 1. I very nearly bought it. Now it's at 2. Last time I looked, it was 2, but yeah, that's cool. That was the big thing that I'm interested in, is when they can do the smart contracts. So, all right, so let's look around the world here. We got pig gaining strength, euro collapsing. Does that mean dollar strength? Maybe. Kitty cat collapsed. Well, oil is in that period. Okay. William says Afghanistan situation will have a major effect on geopolitics in Asia. Why? Yeah, it's a shit show for sure, but why? Why a major effect? Like, what the hell did Afghanistan do globally that had a major impact? And removing that, what would that? I mean, look, I don't need to get into it. But look, with the country that has GDP of 2, right? Look, the British were there, sat there for 20 years, and then left. The Russians went there, sat there for 20 years, and then left. The Americans gone, they've sat there for 20 years and left. Look, nothing's changed. The United States wanted to build a pipeline from Iran through Afghanistan, through Pakistan, and into the port. Never got it done. Too bad, so sad. But look, the Americans left. What do you expect would happen? Oh, well, we got all those Taliban. They're all left. We killed them all. So anyways, I don't think anything will change. I think it's very unfortunate to the people that are left behind. I think the civilian population is not happy. But as far as, and somebody else said, climate change and the United Nations. Look, guys, these are all important things. I feel bad for the citizenship of Afghanistan. I feel bad that we're killing our planet. But that has nothing to do with Forex. We need to make money today. You want to feed your kids? Make money today in the market. Oh, well, we'll never use oil again because we're all going to drive Teslas in the future. Okay, that's great. That's great. Now sit down, shut up, and buy some oil, right? So what it comes down to is we track the flow of money, not the goodness and badness of the world, right? But if the United States pulls out of Afghanistan and the Taliban take over and all hell breaks loose, look, the GDP of Afghanistan is 0. So as far as the flow of money around the world, nothing happened. Okay? So if you feel bad about the situation, become a multi-millionaire trading Forex and then donate money to those that will support your cause. Okay? Cool. So I know that's brutally agnostic or whatever, but we need to follow the money. So what is much more important is that you're tracking changes in the Chinese economy on a minute level, not just GDP, but the subcomponents of GDP. How are they doing with COVID 2021, right? What are they doing? What plays are changing in the government? What are their buying needs? Are they buying globally? Who are they buying from? Because what we're talking about, if they're buying goods and services from outside the Chinese border or not buying stuff, then you know what? You know, right? Then this is where we're going. Yeah, Chuck's like, wow, zero's a big improvement. Right? So anyways, it's brutal and I'm being facetious and I'm exaggerating for effect, but I'm trying to get the subtle point of, I don't care about the Chinese economy per se. I care about whether they buy stuff from other economies. And if so, money will leave China, aka the Chinese currency will weaken, and then they'll buy a new currency, aka that currency appreciates, and then they bring some sort of good or service back to China. So this is what I'm tracking. And do we have economic conditions that would be favorable for Chinese importing more from their trading partners? If so, I'm tracking the flow of money. Now you might say, oh, well, China's communist and that's bad. And I'm like, look, that's irrelevant to me. Okay? They're capitalists, good enough for me. And if they're buying from Australia, buy some Aussie dollars. Okay? This is what we're looking at. Okay? So climate change, yeah, look, we're all going to die. It's going to be horrible. We're all going to just starve in a giant desert. There'll probably be a great war to end all wars where we scrap over the last piece of the last green plant, the last drop of water. Great. That's great. But you better make some money now, son. Right? Okay. Cool. Oh, so Chan finally got his stuff together. Cool. Good. Right? That's what I say. No Chan left behind. All right. So anyways, let's move on. Risk off here and risk off, if you will. I don't really look at this as risk off. I look at yen. It's too early in the season for yen weakness, so that's not shocking. But the combination of yen and dollar strength at the same time is not good. And you'll probably look at this, and I'd say there's probably a commodity play here, and Aussie, Kiwi, CAD all down. So yeah, so no liftoff yet. Okay, for the macro play. Okay. Okay. So, but, there's a time for everything. So let's start with commodities, yo. All right, because we need the commodities to move one way if we're going to get the currencies to move the other, or whatever you're looking for. All right, so we have plan A and plan B in here going back to last month. Okay. So right now, I have a line in the sand at 66. The other one was at 67. We're breaching through. Okay? Okay? We're breaching through. And by the way, once again, I've taught you how to trade oil, and these are the candles that are important to you for the day. So now, I want it up. Okay? I want it up. And on my other trades, the trades are based on a plan. Oops. Let me get my drawing tool. Let me get my drawing tool. She's booting. Okay. What I was hoping for today was something like this. Okay. And because we're not getting this, I gotta be careful of my other trades, because the correlation will dictate, like, no matter what I did, on whether I was a buyer or seller on other asset classes, they were based on this general strategy of things like energy up. Now, I also know that, oh yeah, you know what? I forgot to make the point. I always just, it's such a concern to me 24 hours a day. I just assume you're on the same page, but I have to declare today is the third week of August. Now, really, it's probably next week, but you know what? Let's not split hairs. So I am preparing to be RWA, or I am RWA. And what I'm expecting here is, maybe this, but I don't have it yet. But I'm okay with that. I mean, I'm not betting the farm. But what ultimately I'm preparing to see with my mind's eye is this. Okay? So I know I'm early, but I'm in the game, I'm in the game, I'm preparing. So just psychologically, I don't want to miss something like this because I'm not aggressive enough. So I know my level of aggression has increased from last week and the week before. So now, I'm much more willing to try. Okay. I know the risks. I'm not going to take too much risk. Okay. Oh, hey, Darko, I made some phone calls, right? So, and more phone calls are going to be made. I have a meeting later today, but I know we need to talk. But anyways. Okay. So I'm just preparing. I know I might be 1 week early. I might be 7 weeks early. But I don't like sitting around waiting to be attacked. Okay, so I'm a little more aggressive. Okay, cool. So I'm adjusting. Great. Nice. Great. Fine. All right, so this is our gold. Okay. And once again, you can see what we're stinking. There was a bit of a flash crash. Look, I didn't know it was going to do that. Okay. Remember, if you can't plan for it, then it's closer to a black swan than a plannable trade. So you can see back early in the month, we had this coming down to 1755, coming up, double bottoming at 1755, higher high, and then higher low, buying it back here. Okay, well, what's actually happening is up, 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 down, down, buy, up, 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 down, down, buy, and now the up, up, up. Okay, if you are buying this, you are going to be challenged right here. Okay, the ambush is right there, right before 1800. The bears are right hiding in the bushes and the treetops. Okay. Okay. So it depends on how you feel. Are we going to head up? Or are you more on the bearish side and you believe, nah, it's gonna do one of these? Well, good. Now you know what you want to do. So set it up. Okay. I would probably drop into daily pivots and day trade it, knowing that, look, I wouldn't be shocked if we did one of these, right? So just decide. Somebody asked me the other day, like, how do you know? I'm like, I don't know. Well, but you do this and do that and the other thing. You're like, yeah, that's right. Well, how do you know that's right? I don't know it's right. Therefore, knowing when you're wrong is much more important than knowing that you're right. Mohammed says, will the Fed taper early? I don't know. Okay. I don't know. Do I believe it? They could, but I can tell you the last time there was a taper, it didn't go well, but the taper was started in December. Some people say, oh, it'll happen next year, and they interpret that as January. Does it matter fundamentally? No. Like if they wait this till January, that's fine because then we'll have a good autumn. Okay? So, you know what? I don't know. I have to be here. Okay, Mohammed? I have to be here and pay attention, because even if I had a belief, like let's say I believed the Fed will taper in September. That's the announcement, that they announce it in September and they start in December. Let's say that was my belief. Well, others are going to believe it or be afraid of it. And so as we get into September, they will adjust their portfolios as a risk management scenario. Money will come in, money will go out, whatever they need to do to protect themselves from risk associated with some people's belief that a Fed taper will be made, some people's belief that it won't be made. Nobody knows what will happen until it happens, but we know people will do something about it before it happens, and my job is to be there as well. And then they either announce or they don't announce. Okay? The market is very calm, still waiting for the Fed. No, it's not. They're calm because they're on the beach drinking margaritas. It's calm because there's nobody here. Now, today is maybe arguably the first day, right? The first day we could say traders are coming back. But even then, I think really, it's the first day. So the answer is it's important, but it's not important. Okay, anyways, I was going to pull out a calendar, but Windows doesn't work. By the way, I believe Windows updated while I was gone, and now Chrome isn't on my toolbar. Isn't that that's bad. That's a monopolistic behavior. I think that's bad, where they're like, wait, what? Chrome is your default browser? No, you should use our crappy browser that nobody uses, so let us help you. We will kill your Chrome, and then we'll make our browser the default. That's bad. I don't like that at all. So anyways, let's take a look. Did we do everything? No. Yeah, well, yeah, WTI. I'm waiting for that. Gold is maybe. I guess we'll do a crypto here. Okay. Bitcoin. Okay. And then up here you go. And then the higher one, I suppose, doesn't matter quite yet. We're kind of hung up on this lower bit if you want to do it that way. But I think what's going on here is we're hell-bent to getting 50, and then, I'm not sure about 50, right? Ethan says, hey, Wayne, do you think once interest rates are raised, we will encounter deflation, stagflation? No. First of all, I've already explained stagflation can only happen under government pricing controls. I've already explained it in great detail. If someone is talking about stagflation, stop listening to them. They don't understand economics. They think they do, but they don't. So be careful there. So there's no worry at all about that yet, unless Biden's administration decides to control prices. Then it will happen. Okay? The second part is once interest rates are raised. So last year, actually, was it last year or the year before? Last year, I guess. No, it was the year 20. Yeah, I guess last year in April, I told you guys that we should think about maybe 2025. Maybe 2025, the Fed will raise interest rates from 0 to maybe 2%. Now, the question Ethan is proposing, will we have deflation by then? Not if we have GDP of 3%. Okay? Okay? So all of that is like way off. unless you're talking about 8 to 10 years from now. But I'd be careful. Don't even think about those things. Don't even worry about those things. It'll be a worry down the line. But I want you to make money today, tomorrow, next week. Okay? If you guys don't understand, we just started the second half of the year. In the next 8 to 9 to 10 weeks should be some of the biggest, best weeks of the year. If you don't know how to take advantage of that, you need to join FX Bootcamp and then ideally upgrade your account to the live trading group. Because if you just kind of like go through the next 12 weeks like it's all fun and games, you just threw away one of the most important times of the entire year. So this is where you guys got to focus on the now. Don't worry about everyone driving Teslas. Don't worry about we're all going to die of climate change, all this kind of stuff. Don't worry about the philosophical stuff. Go ahead and make millions of dollars and then take care of your philosophical concerns, right? Right now, you just quiet all this noise and trade. Trade well, trade beautifully. Focus on your technical analysis to confirm or deny your bias. Okay? But I need you to be focused on getting in your trades, executing your plans. Nothing else matters now. Okay? You had all summer to worry about the taper. Now it's get in the game. Okay? Focus. All right. So anyways, commodity. Not going up yet, so I don't see the macro play yet. So I got to be ready, willing, and able. Now, this area here, 66.5, and the other one was lower, but it's still plausible, right? So we got to be watching this maybe on a smaller time frame. Okay. And watch it. So this is a hard drop, but I'm hoping this week, okay, maybe a change. If not this week, next week, and all that kind of stuff, okay? Oh, Chuck says not 2% one hit, surely. Oh, no. Oh, my God, no. No. Okay. In the course of maybe 1.5 years, Chuck. So Mohammed says, so why would the dollar be strong? What's my argument for that? The macro play is dead. The inflation trade is dead. It's the only thing. Okay? More likely, the Fed doesn't announce a taper and the dollar gets strong because people will continue to front run the Fed in the bond market. Okay? But for you to understand that, you have to understand how to trade the bond market. And you'd have to understand monetary policy and why everything is happening, right? So you'll see the bond yields drop. You'll see the bond market rally. The U.S. dollar will strengthen, all because everyone was betting that the Fed was going to taper. Then they find out they're not going to taper, or they didn't announce a taper, so they're probably not going to announce a taper until December, and then not even start till early in 2021, and they're like, oh my God, we can still front run the Fed till the end of the year, and boom, that would do it. But it's not my point of view, as Mohammed says, but from your point of view. I don't have a point of view. That's just how the market works. Okay? So that's just the mechanics. It's the mechanic. It's like, what's your point of view on why my BMW idle's a little rough? He doesn't have a point of view, right? Your oxygen sensor sucks. You got to replace it. Right? Chuck says, hey, so the 10-year yield is down marginally, overnight. Don't pay attention to it that close. It's not a tit for tat, hardcore correlation where you're watching the yield change minute by minute and you're watching the dollar gain its strength or weaken minute for minute. That's not what's happening, but it's telling you how money is being invested. Yeah, Chuck's because it's a Beamer. Yeah. So anyways, no, let's do yens first. Okay. So I look at this and say, holy crap, step back. Step back. From a bullish macro point of view. So I look at this and maybe the news in China ain't that great. Maybe they're not going to import data. Maybe there's fear of an Asia slowdown. I know some Asian countries are actually reporting PMIs of less than 50. Do you guys remember I explained this last week? I think it was Vietnam, Thailand, Indonesia. I'm pretty sure it was those and maybe a couple others have PMIs of less than 50. And you're like, Wayne, well, why is it important? That's why. See, right there. See those yens coming down? That's why it's important. Do you guys remember when that was last week? When did the PMIs come out? Wednesday? Okay. Now, 3 of these have the same template. So why don't I change this one to the same template, confluence. Okay. What do we see here? Let me double check this one. Let me make sure it's set. Yeah, okay. What do we see here? First thing I look at is the big fat line. Do you guys see the big fat line? Mohammed wants to know if I use the conference board. It's way slow, but it's good economics, but it's really, really slow, like maybe 6 months behind. But you're saying, well, how about the leading indicators? Yeah, go ahead and use it. Make a decision, right? You can consult the Oracle for all I care. Make a decision. So anyways, you see the big fat lines here? Right? So what's the first thing I notice? Okay, yen crushed the pound. Yen crushed the Kiwi. Yen has been crushing the CAD, but the weakest here. So this is the weakest. Aussie is way, way, way down. CAD is way down. Okay, and Kiwi and pound are simply down. Okay? Based on not price, but percentage change. And it's not really percentage change because what we're doing is I'm looking at the central pivot. So we're looking at similar standard deviations. So I think it's not going to be precise math, but it's going to be similar math that shows you based on what was happening, what is happening now on a relative basis for Kiwi and pound are the same. And we know the yen is constant, so pound and Kiwi are worth about the same. And CAD and Aussie's very weak, and Aussie is weaker than CAD. So commodities are down. Okay, so over the period of the next 2, 3, 4 weeks, wouldn't it be interesting to see commodities recover? By commodities, let's dumb this down even further. Even though it's not correct, let's put a label on here. Gold and oil. So when gold and oil goes up, Aussie and CAD will probably go up. At the same time, because of that, not that they're correlated per se, but because of these asset classes going up, yen will weaken. And maybe right now, because yen is strengthening, Aussie and CAD are down, okay, and gold and oil are not going up. So what we're more interested in is tomorrow. So to me, today is already dead. You made trades hours and hours and hours and hours and hours ago. If you said down, you got paid. If you said up, you've probably been knocked out or you're biting your fingernails. Okay, trying to live through the day. Maybe it'll be better for you tomorrow. Okay, but if you're walking in, what do I do now? Really? Well, let's do this then. For those people that have no plan, right? Have done no work over the weekend, did not watch the market open. First of all, I have no idea what you're doing. And that's because I don't think you know what you're doing. If you skipped all of that, right? And now you're showing up, you're like, Wayne, help me out, give me a plan. I'm like, well, where were you 12 hours ago? 13, 14 hours ago, I was at my charts setting up trade plans for today. Now we're here today. What are we doing? I'm like, okay, this is important for two reasons. It's the projected low for the week and it's early in the week. So that tells me, right? What? OOP. How do you trade OOP? Kick it off the 21. Okay. Hit the target early and then CT, counter trend. Okay. All standard operating procedure. So if it works out now, we don't know, but you have to set it up. Now the next part is maybe, I'll do this in a brighter color. Maybe now we get one of these moves. Okay. Okay. And if so, you're doing a change of trend. So you're going to look for a hammock, counter trend, 1, 2, 3, double bottom type reversal. Cool. So that means maybe not this second, but between right now and tomorrow, you'll get an opportunity like this. And if you don't trade it. You back off. You wait. Okay. But this is an MM2, as you know, and this is a WS2, as you know, and they both say support. And so if anybody out there, if bears are paying attention, they're going to say, oh my God, right? Take profit. Same thing here. First of all, that's the weekly projected low on a Monday, so you should be careful of a counter trend. The second part of this is the monthly M2 is a little bit lower. So this might come down to here and then pop up, and this will come down here and then maybe pop up. Meanwhile, this is support and support. Okay? So, yeah, whatever. Okay? Okay? Do you think maybe front running the weekly pivots? So one of the things I teach at FX Bootcamp is how to front run the weekly pivots. And there's some pretty interesting things going on here. So you should be done for the week. You traded Friday and you're done for the week if you're bearish. Okay? So that's that. So I'll pick this one randomly. And it looks like an all right place to trade. So if I were me, I might spend, I don't know, the rest of today and tomorrow looking for an opportunity to buy it. And if that don't work, what's my plan B? Lower. Okay. Now, buying isn't the decision. If I'm going to be a buyer, and that was something that I've already decided, hopefully you've made a decision. And if I am a buyer, I either buy it here or I buy it down there. If I buy it down here, I'm expecting range. But I also expect, using seasonality, that at some point in the future, even if we are ranging, we will no longer range. Okay, do you understand? It doesn't exist now. You can look at this chart, you can use any indicator you want. It will not tell you that it's going to break to the upside. I know it will break to the upside. I just don't know what time and at what price. Well, that's why we use technical analysis. So I look into this and I'm like, well, this could just go up. Now, cool. I have my doubts. I think it's too early. The other one is down here, but again, if you're a technician, if you're using technical analysis, this tells you range. But I also know, using seasonality, which has nothing to do with this chart, no technical indicator, that even if we're ranging, we're going to break to the upside. So either way, what am I going to do? What's my intent? Well, I might buy it here if I get the bullish reversal pattern, right? Or I might buy them down here and then anticipate sometime in the future, maybe a breakout, and then I'm going to grab this and I'm going to go ape crazy, ballistic Rambo style. Okay? I'm going to be like Rambo, and I'm going to run to the helicopter, take out the 50 caliber Gatling gun and shoot it with one hand. Ba, 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 ba. Even though the recoil would probably break a human, spinal cord, I'll do it with one hand, right? The thing is, I would not have said that, or I did not say that last week here. I did not say that last week here. These are all good trades, by the way. But I'm talking about now, but really next week or the week after, or the week after, or the week after, at some point, like my aggression level is building up. Okay? Sorry, Mr. Sangam. No, I don't. But I don't know. The candlestick guy rubbed me wrong, so I don't recommend his books now. He rubbed me the wrong way when I met him. I think we're in Vegas. He was so funny. He wasn't allowed to be a speaker in Vegas because he pitched his stuff so hard and got lots of complaints. So they stopped inviting him to the conferences. So one day he just showed up as a visitor. An audience member. And he comes up to me, and I'm at my FX Bootcamp booth. There's about 30 boot campers standing around talking to people and stuff, like real awesome community, right? And he comes up to me and he's like, hey, we should do something together. I'm like, yeah, I'm always willing. If it helps people, I'm totally into it. And he's like, oh, well, we could do this and do that and we can do that. And he says to me, but in front of boot campers, we can make a lot of money. And I looked at him and I said, well, I already have a lot of money. And he just stopped and he was dumbfounded. I'm like, so unless you're going to help me help people, I'm not interested. That's what I want to do. And he just we shook hands, he walked away, and that was it. Never talked to him again. So I don't know anything about his books, but they're expensive. They're like $500 a book or something. So I don't recommend those. All right, so you know what? It's a Monday. Monday. Forex.Today. I'm cruising, I'm bruising, I'm never losing. I'm in my car going fast, and this is what I'm doing. Around the way is where I'm from, and I'm from Manhattan, and I'm not a bum. All right, here we are. Cool. Oops. Man, I had a good time with you guys in New York. As soon as COVID is better, because it's a little scary to travel. But once things are open and booming again, one of the things I'd like to do is I'd like to do a trip around the world, stop off at major cities around the world so that I can repeat what I just did in New York City. Right? Let's meet up in Singapore. We'll have a Singapore sling, talk Forex. Then we'll tour the city, have dinner or something, and then I'll get on a plane and go to the next. Yeah, well, the economic history, yeah, so I don't know. He's the only one that popped in my mind. Yeah, which city? Germany, I don't know. Cologne? I don't know. Wherever you want. Wherever there are people. Yeah, like I would almost leave it to you guys. Like, let's get 20 people together in a city. Which city? I don't know. Let's get 20 people together and you guys pick the city and I'll show up. We'll have a good time. All right. So anyways, let's go here. RBA meeting minutes. Okay. Vic is like, Cologne is great. Cool. Many years ago, I think about 1998, there was an article written about my sort of high-tech startup days, and it was written in Germany and in German, and the magazine, which I can't remember now, was based out of Cologne, and I'm like, Cologne? I heard that place stinks. Anyways, I looked it up. I'm like, I don't know anything about Cologne, but so it's just funny. Like, I don't know. Let's meet up. Chuck's like Singapore slang. Hey, best $40 drink I've ever had. But anyways, yeah, right. Yeah, I got sidetracked. Oh, well, actually, honestly, Marina, I hired a developer. He got about 80% of the coding done, but it's coding, right? So I can't read the code. But he died of COVID, Marina. So the project just stopped, communication just stopped. And at the end of the, like, I don't know, 6 weeks later, I got my money back. They just gave me my money back. It's just like, it's been refunded. Like I'd put up, I don't know, a couple of $1,000, and I owed, like, if once it was finished and tested and all that kind of stuff, it was going to be several thousand more. So we got about, we got maybe 2/3 of it all the way through. And like I said, maybe I paid for half of it, and we got about 2/3 of the way through, and then everything stopped. And then, and 6 weeks after that, after, you stopped communication, all of a sudden, boom, I got my money back. And I'm like, oh, yeah. So apparently maybe all his clients were complaining that he just dropped off the face of the earth. So anyway, so that's what happened. I do want to do it, though. Okay. Darko's like, he prefers Frankfurt. Yeah, I like Frankfurt. Let's party in Frankfurt. Mohammed says, so how do you use seasonality as a framework? Well, I'm in the process. So I have 2 PhDs working right now on projects for me. And I have one guy that I'm going to try to prove empirically what I think. So to answer that question, like, let me continue with the formal research. Oh, it's just WordPress stuff, Darko, but it was all custom indicators and custom this and custom that. And, like, eventually what happens is you have so many pieces of duct tape holding everything together that you have to understand the duct tape, not, okay? So anyways, don't worry about it. I'll just redo it. Unfortunately, maybe it's next year. All right. So anyways, RBA meeting minutes. Be there, be square. Tuesday. Okay. Okay, GDP. Obviously, we got to pay attention to GDP. 13% growth year over year. Jaw dropper. But you got to remember that that's from 0 to 0.13. But anyways, yeah, so we'll pay attention to that. That's interesting. I mean, obviously, what we care about really is, how much of that is Germany and how much of that is France and all that kind of stuff. But it does just all add up. But I think one of the challenges that the ECB has is, like, Portugal might be choking on its own blood, and and Germany might be booming, right? Oh, Mr. Sangam says about Piketty and in his book on socialism. That's interesting. I don't know what he says. He's a income equality guy for sure. I've read, it's Thomas Piketty, I believe, right? I think he will win the Nobel Prize in economics. I don't know if that's his attempt. The only reason he hasn't won it yet is he's too young. But he's really well spoken, and his angle, at least his other book, Mr. Sangam, was he was using big data. And that's very, sellable, right? Like you're like, oh, machine learning, big data, artificial intelligence, give me some money for my startup. And they're like, oh, okay, right? So his methodology is right. Like he's really understands things politically. So he'll win the Nobel Prize. So maybe this is what the new book is about. But if he's anti-socialism, then I don't think he'll win the Nobel Prize for that, because I lost a lot of respect for the Nobel Committee, because if you remember, Barack Obama became president of the United States on a platform of making things better. Okay? For everybody, but certainly for the African American community, right? Great. Really good. So he's in the White House, and it's like one of the early days of just getting into the White House. He sits down on this, and all of a sudden the phone rings, and he's won the Nobel Prize. But he's only been there like 3 weeks or something. And you're like, oh, you won the Nobel Prize for what you are going to do. I'm like, wait, what? Like, if you're going to win the Nobel Prize for curing cancer, it's not that you go out and tell everyone you're going to cure cancer. It's that you've actually gone through and done the science and then gone through all the trials. And then maybe 20 years after curing cancer, they give you the Nobel Prize. So as soon as that happened, I'm like, oh, crap. There it goes. Now I don't care about the Nobel Prizes anymore. And this is not an anti-Obama thing. I'm just like, well, what was that all about? I mean, it just unbelievable. I'm sure he even was shocked, like, what the hell? I haven't done anything yet. So anyways, I'm like, I don't care about it anymore. So if Piketty writes a book that's anti-socialist, he may never win the Nobel Prize. But I talked to my professor, after reading the book, one of the things we had to do is compare him to a bunch of other people, contemporary economists, and a lot of it was based on income inequality. I thought for sure he was going to win a Nobel Prize and all that kind of stuff. But now if he writes a book about anti-socialism, which I think is what you're intimating, which would be interesting, then maybe now he won't. Because Obama, in my opinion, would have won because of some sort of politics. So again, I'm not on the political side there. And I think at the end of being president of the United States for 8 years, I think Obama was very disappointed with the whole experience. And he probably looks at the Nobel Prize, and it's probably a scarlet letter on his soul where he was looking at it like he wished he could have done more. Oh, really? Is that right, Johnny? Yeah. Yeah, I think everyone was just like, what the frick is he? So anyways, that just destroyed it for me. So I don't know if all those people were fired off the committee or something, but I don't like that. Anyways, who cares what I like? Let's figure out how to make some money, huh? Let's get back to this. So European GDP, probably very heavily, weighted by one or two economies. If you're really concerned about the growth in Europe, I would try to you'd almost want to do a map of GDP country by country. So what would the change in GDP year over year in the Eurozone be if you subtract the Netherlands and Germany? And this might be like -2. Right? Like, right? All right. So anyways, pay attention to that. Retail sales, huge, because, I think it's going to be a lower number because I believe gasoline prices have come down. Now, I need to pay a lot more attention. See, I pay attention to everything as I go through the world, and I talk to everybody I possibly can about economics. How's business doing? That's my great opener. So how's business? Things booming? You got people? What's going on, right? Customers here, orders, how do you feel? What about, why is it not, why is it this way? And what do you think about next year? I ask everybody, but I went so many years without owning a car that I forget to track gasoline prices and stuff. So I just go and I fill up the Porsche, and it's like $100 to fill that son of a gun. The gas tank is so big, but I need to pay a lot more attention. Like, is it going up? Is it going down? And I don't know why I don't. But that would be very important. And so, for example, retail sales is done by number, not by units, right? So we don't know, for example, if you looked at gasoline as a subcomponent of retail sales, it doesn't say, 572 billion gallons this week versus 573 expected. So you're like, oh, well, we're short 1 billion over the week, so that's bad. No, we track it in dollars. So if gasoline prices have fallen 10%, well, then retail sales will be way down, because I don't know if you've gone to the Fendi store at the mall and bought a new purse. Okay? But you probably bought some gas. Okay? So there's a lot of food and energy that goes along into things like retail sales, right? And so then you want to strip some of those off. Are we buying cars? Well, we're buying used cars. Is that in retail sales? I don't think used cars are. I have to double check that. I mean, depends on how you buy them, I suppose, from a dealer or non-dealer. So anyways, this will get tricky. I don't think it's going to be a good indication. So we're going to have to maybe dive a little deeper into that tomorrow, okay? Marina says Obama was a diplomat, not a president. I think in the second half. Marina, here's my thought, and of course I have nothing to back it up, and nor does my opinion matter, but I think he went in and he did want to change the world, and I think he did want to have an impact on the African-American community. Sorry, black community. Sorry, right? So I think he fully intended to do it. And, well, let's just say it's difficult. It's hard being president of the United States, and it's not as powerful as many people think. So I think he got reelected because people wanted to give him a second chance. And that very quickly in the second term, he's like, yeah, I'm a diplomat. I'm not a politician. Because he just didn't have the power to get anything done, right? So you had Obamacare, but it was so poorly done. It was such an unbelievable disaster. Is it his personal fault? No, he had staff and all this, and they all said, oh, it's going to be great, Mr. President. It's going to be great, Mr. President. Oh, this is fantastic, Mr. President. And then they rolled it out, and oh my God, it was so bad. It was like an unbelievable disaster. And that just tarnished it right there, and then all of a sudden, whatever. And I think by the second term, he's just like, let's just get through this. But whatever. I don't blame him personally. Okay. All right. So yeah. So anyways, important. Let's pay attention to the subcomponents. Try to get some, because I want to know if there's going to be a liftoff or not. Right? Okay. Cool. Exports, imports out of Japan. Important, right? Yeah. Okay. So right now, today, Japan is importing Japanese yen. Question is why? If there's an earthquake, that's one why. The second one, well, I don't know, just normal flows. Okay. I think we're 8 weeks away from me really hardcore selling Japanese yen. Okay. Mr. Sangam says Kissinger was a diplomat. Yeah, he was he lived a full life. That's for sure. Okay. Okay, going back into Australia. Okay, I don't think this will matter so much. Going into New Zealand, here we go, here we go, here we go, here we go. Wednesday, Asia, Tuesday night, New York, boom, bada bing, bada boom, bada bing, bada boom. So I think the Kiwi's weak today, but that would be an interesting turning point. So like, you know, in the next 24 hours, maybe a stabilization and potentially a change in direction. Doesn't mean you have to trade it, but maybe by Wednesday, if things are interesting, if this RBNZ decision mixed with seasonality is important, right? Like what they say sort of how, like perfect storm, they say the right thing and therefore it makes the market do what the market wanted to do anyways, then this could be a game changer and maybe we start buying New Zealand dollar. Cool. So like this is important, maybe not right in the second, but like maybe by the end of this week, it does matter. So it might start stabilizing now in anticipation of something. But remember, we're so early in this game, even though I'm telling you, and I told you 9 months ago to be ready, willing, and able today, it doesn't mean, it means we're ready to get in the game, but we're not necessarily in the game. So this could be a catalyst in which drags us into the fight. It may not be, right? Because it's still too early, but you're like, all right, this might be it. So again, using like the military analogy, if you know there's bad guys out there and you're hunting for them and you're just walking through the jungles, well, the first thing you're going to do is you're going to look at a map and you say, well, right, there's mountains here, right? Here's the topography, right? This is a topography. And there's a mountain here. Okay. Okay. Then you know this choke point in here would be the place, right, between the space here. This is where you're probably going to be attacked. Okay? And you got to be careful about that, right? And so you don't know, but you're walking around looking for the enemy. Are they here? Are they there? And so this would be like, here's a choke point. If you were going to go from bearish to neutral to bullish on Kiwi, this would be an interesting choke point in which you could expect that something might happen here. Not that it will, but it might. Are they going to raise interest rates? But no. Nobody's ever going to raise interest rates ever, guys. Ever. 10 years from now, Europe will still be at zero. Okay? So what matters? They say something that says things are going to be better in the future. Okay? Changes the direction of money. They're like, look, our economy sucks. Real estate prices are way down. Stock prices are way down. It's been horrible. But the economic data is improving and we expect, things to be great in 2021. Good. Buy now. Why would you buy now? because you want to buy real estate when it's cheap. You want to buy the stock market when it's down. Both of these anticipation of GDP, okay, going up in 2021 to 2025 period. You don't want to buy after it's happened. Okay? But don't think, right? It's too easy to say, well, when they raise interest rates, that will attract money. That's not 100% correct. Okay? On hot days, people eat a lot of ice cream. That is true. Okay? But I want you to think ahead. I want you to be the guy selling ice cream. And you buy ice cream in January. Okay? In North America, of course. Okay? And you sell it in July. Now, if you're an ice cream dude and you wait till June to buy your ice cream, you're going to pay too much, son. There's going to be so much demand. There'll be hardly any ice cream. And everyone's buying ice cream because they're not smart. They don't think ahead. Oh, well, they also don't have a refrigeration to keep it cold from January. But nobody's buying ice cream in January. So you call up the ice cream distributor and you're like, yeah, I'm looking to increase some inventory and all that kind of stuff. And he's like, no shit, really? Yeah, like, so I'd like, if you can give me a deal, I'd like to like buy some supply. He's like, oh yeah, man, no one's buying ice cream from me now. So I'll tell you what, I'll give you a package deal. If you buy some chocolate, you buy some strawberry, buy some vanilla. We got some Rocky Road here. Do you want moose tracks? I'm like, yeah, give me a bunch of these things, and but give me a good volume price and give me a discount because I'm buying in January when I'm the only buyer. And they're like, yeah, you know what? And we can give you some from last year left over. I'm like, yeah, it's good, right? And you fill your freezer when prices are cheap and demand is low. But why do you make money on this? Because you're smart enough to know that demand will increase in July. Okay? That's the moneymaker, guys. So you can't wait till July. That's like saying you buy New Zealand dollar when they raise interest rates. Why? The New Zealand dollar will already be appreciated. And then you'll say, look, the asset appreciates when interest rates go up. Well, that is true, but what is more true? When people anticipate interest rates are going to go up, then they buy the asset when it's cheap. So it's cheap when you buy ice cream in the winter, and it's expensive when you buy your ice cream in the summer. But we all know there's lots of sales of ice cream in the summer. But that's not enough information. It's not even relevant information if you think about it that way. So again, if I don't care about New Zealand per se, it's a small economy. And we know economic conditions suck, that COVID was a disaster. Okay? Good. Might be a great time to buy. But they're not going to raise interest rates for 3-4 years, Wayne. Oh, I know. Okay? I know. So I just have to have the right price and the right time if I think things are going to improve. And some demand from China for Australian exports increased recently by 650%. See, if I know that, then I have alpha. Some demand from China for Australian exports went up recently, like weeks ago, 650%. Cool. So is some of that new demand for New Zealand products too? I don't know. Or maybe because of this demand, Chinese demand for Australian products makes Australians a little richer, so they spend more money on products and services from New Zealand. See, China is doing better, so they buy more stuff from Australia. So Australia does better, so they buy more stuff from New Zealand. And then New Zealand people buy backpacks, travel to the United States, and walk the Appalachian Trail, and they need US dollars for it. I don't know. But there's a circle of life. There's a circle of life, right? We call that flow. Money flow. That's what we trade, yo. Okay? The flow, man. Stacks of paper that move. Okay? So if they do raise interest rates, good. Do something about it. Okay? That's ultimately it. That's ultimately it. If they do something, if they say something, if it's important, do something about it. I'm telling you, once again, let me say it. 8 months ago, I told you today was an important day. I want you to recognize that. I want you to say it. I want you to stand up. I want you to write it down. I want you to sing it. Okay? Today is an important day. And I told you 8 months ago that this is the beginning of the game. Summer's over, yo. Sit down. Be ready. So if something important happens there, if they do raise interest rates, if they don't raise interest rates, why did they? Why didn't they? Will they again? When will they? Why won't they? What's going on? How do they think? How's COVID? What's import? Well, exports? What are? Just get in the game. And I highly recommend you specialize in something. Don't just start looking around. No. Okay? Be a boss. Okay? Today is an important day because it's the beginning of the rest of the year. Okay? Did I go to Florida during a peak trading moment? No, the markets came down. Did I go to Chicago and northern Wisconsin during peak markets? No, it was calm as hell. I squeezed in a trip to New York. Why? That was during a non-important week. I know 8 months ago that the second week of August is just not that important to me. So I'm going to go to New York. It's okay. But today, no. I'm chained to my desk. This is important. You wake up early, you stay late. Okay? It's not that today will offer volume and volatility, but today and tomorrow and the next day and the next day and the next day will have more and more volume and volatility. You want free money? Buy the VIX. Done. Right? That's right, Lucas. Yeah. Time to harvest, right? In pips, at least. So that is the mental attitude is the important part. But also maybe here's a side part. Some people feel like Forex is random. Yet I'm teaching you that you can plan a life around Forex and how normal things are in being a trader. You can have a second job, by the way. Forex could be your side hustle. Sometime in your future, the job will be a side hustle. But you always need a side hustle, and you can do that. You can be married. You can have kids. Okay? This is not random. This is logic. And you can plan things like, oh, well, today is important, right? I used to have a watch, but now it's broken, right? I don't have any other watches laying around here. But anyways, yeah. So this is an amazing career. All right. So anyways, moving on to Wednesday. Bank of Canada, man. Holy smokes. Yeah, well, CPI out of Europe. Don't worry about it. They don't have any. Okay? Great. So the CPI out of Canada. Ooh, but I like the Canadian dollar. I like it. So I hope the numbers are good. Yes, there's going to be some transitory. Okay? But we'll see. I think inflation's going to be low once again because oil prices have fallen. Cool. Right? Okay, so if oil prices are coming down, gas prices are coming down, inflation's coming down. Okay? Which again really sucks for Europe because I believe by the end of the year, the euro will go up in value, which means that's deflationary, and the ECB is trying to create inflation. Meanwhile, oil prices are coming down, and that's also deflationary. So I told you guys 3 years ago, no, probably 5 or 6 years ago, that what China should do is ignore the United States because the United States will recover from financial crisis. It always does. It can. It's a reserve, right? Great. So China, instead of bailing out its own economy, should bail out the European economy and buy oil, drive up oil prices. And that would create inflationary pressure in Eurozone. Europe will recover. They'll sell more stuff to the United States, and China will sell more stuff in the United States. But also China, see, the Eurozone is 400 million people. So if they save Europe will buy more stuff from China, but also the United States will buy more stuff from China. Right? And so if China wanted to save the world, it should save Europe first because they need saving. And one of the major ways to save Europe, of course, is to drive up oil prices because that's incredibly inflationary. But also the actual real economy needs to be stabilized. So if China stimulated the European economy, it would stimulate the Chinese economy. But if you only stimulate the Chinese economy, then once the money goes away, now you're back to recession because Europe will never recover on its own. Anyways, so move on. Right, CPI out of Canada, super duper important, loving it. FOMC meeting minutes, this is really, really good. People are going to pay attention to this one because if they are talking about tapering, who is talking? How many are talking? How seriously are talking? How focused are they talking? Okay, you actually want to read this. One thing I suggest you do, because you're right there on the website, print out the meeting minutes from the recent meeting, and then print out the meeting minutes from the one before, and then read them both. Okay? So you get like a timeline. What was the major change in tone, in questioning, in thought process? Okay? Aussie jobs, one of my favorites. Remember, that's a scalp. Okay? Aussie jobs report is a scalp. If you pick up 80 pips on it, take your 80 pips and run. I don't know the future, but I know my past. And I've always felt that, right? I've always felt that was a scalp. In it to win it. Okay, Thursday, RBA speech. Yeah, pay attention to that. Okay, claims, fine. Okay. interest rate decision out of China? Do you think there's an opportunity to maybe pay attention to that, maybe do some reading? How are they doing? Are they raising interest rates? Are they not? Are they changing the reserve requirement ratio? And whatever decisions they're making, what are they doing for things like credit? Are they trying to expand the economy? Are they kind of trying to contract it? What are they intending to do? And what does it mean to us, to everybody, to the rest of the world? Okay? That might be worthy of a cigar. Retail sales out of the UK. Okay, this will be great because not a lot going on Friday. So, hey, how are they doing? How's the UK doing? Do people have money? Do people have credit? Do they feel confident in the near future? Are they spending money on gasoline and food? Or are they ready to make bigger purchases? See, a bigger purchase says, well, if I spend a big amount of money today, what if I lose my job next week? Then I'll be screwed. I need that money just in case. So then you defer or delay purchases. But if they're making them, we call the household wealth effect, and that's important to behavioral finance. So what's going on? How do they feel? Same thing out of Canada. Okay, going back to sort of this stuff. Inflation. What are people doing, right? And then retail sales. So CPI is sort of, I'd almost look at it as, well, in this case, it's supply, not demand. So how is the supply chain impacting prices in Canada? And if prices are high, are people still spending money despite it being high? Why would they do that? Well, typically you're willing to pay more, so you eat the inflation if you have cash in the bank, right? So if the government gave you a whole bunch of free money and you want to use it to buy something, and then you find out prices are 10% higher than last year, but you're like, well, I got all this free money, so, I'll buy. Now, if you didn't have much money, and certainly it was your money and not free money, and prices are 10% higher, you might say, ooh, well, maybe I won't do it this year, right? So, for example, I got a bid. Well, here's an old bid. Here's an old bid for some work in my backyard from, I don't know, less than a year ago. And the bid says $30,000. Now I call these guys up. I'm like, yeah, let's do it. And they're like, no, we can't do it. It will be at least 6 months, probably longer, before we can come out and do it. Huh. So I get another bid from another company. They came out, and for the same bid, $30,000 bid, their bid is $58,000, and they can do it next week. Prices went up 100% in less than a year. 100%. So I have to decide, do I pay it or do I just wait till next year? So this is what we're tracking. Is there inflation, and how does it impact consumer behavior? Okay. Cool, right? Coolio. So we are at key prices. We're using technical analysis to confirm or deny the time. And if not today, then maybe some other day. So if today was a decent day, please click the thumbs up button. The stock market's opening. Peace on earth. May the pips be with you. May your profits be above average. Thank you for being part of the community. Thank you for your hard efforts. Thank you to Traders Way